Here with Sean Humphries from Dominion Lending Centers. Sean, thank you so much for joining me today. I really appreciate you taking the time. This is the third time we are having a video like this. The first one was actually in person, and the last two, well, the last one and this one are via Zoom. So, I mean, the last time we did this, it was pretty good. Turned out pretty good. We had a good time. The people that did watch the video found it to be pretty funny. I mean, we had our moments talking about our unkempt hair and you know, how have you been doing since the last time we spoke?
Good. Been really busy. A lot of interest in the market. A lot of people. CMHC not making my life easy by making headlines on what the market's going to do and the rule changes and how that's going to affect people, which has had zero effect really on people. But CMHC is a pretty big brand name, and so when they say something, people take that pretty seriously, and when they change the rules, people get pretty excited.
Well, the other thing that I find with it is because it's CMHC, it has Canada in its name. People all of a sudden assume that it is law.
Yeah, it's not.
Yeah, no, it's definitely not.
Yeah,
Because
well,
I
there's
mean,
yeah, two other insurers. Now, if it was the Department of Finance that had made the changes, then the two other insurers would have had to follow those rules. But because CMHC acted alone, they believe that the market is going to go down between 9 to 18%, and the prices will go down 9 to 18% in Canada over the next 12 months. They are making changes to help to protect their book, their insurers, their
of course.
insurance. So, they're acting prudently. They believe that Canadians are taking on too much debt right now, and that they shouldn't be buying houses by taking on as much debt as what they are. The other two insurers they don't agree that there's as big of an issue as what CMHC says, and so it's their prerogative to keep things exactly the same as that they are doing. So they're not changing how they're underwriting.
Okay, so that's really good to know. So I mean, if you don't qualify through the CMHC's policy for their insurance, you can always go to the other two, which are still a little more lenient on their policies.
Yeah, and it's not like the borrower themselves or the client as somebody buying a home. You don't have that choice of which insurer you want to go to. I don't make that choice. It's up to the lender to place the file with the right insurer. So it's a process that happens without a homeowner having to make that choice, or a home buyer having to make that choice, or me putting together a mortgage for people. It's not a choice that I make either, consciously anyway.
Right, right. No, that makes a lot of sense. So it's not the mortgage broker or the bank. It's the actual financial institution that would be choosing which insurer that they're going with.
That's right. Yeah, they've got a choice of three, and some people will still fit under CMHC's guidelines. As long as it's 35% of your total gross income going towards paying the mortgage, so the principal and interest plus tax, and then we call heat, which is basically utilities. You can have up to 39% of your income go towards paying that. Essentially, it's CMHC allows for less mortgage to go towards, or less income to go towards paying the mortgage than they did before, starting July
Right.
1st.
Okay, so that's good to know. So I mean, less of your income would be able to go towards your mortgage. It would have to vary. It would have to level out more with the other debt that you have.
That's right. Yeah. So
So
it's a lot.
no, absolutely. And I mean, I know that there were a lot of numbers that came out about it. Lots of different percentage changes in your loan, your total debt ratio, and your gross debt ratio, and all of those numbers were changing by CMHC. So I mean, it's a lot of information that a lot of people maybe just don't understand exactly what those numbers mean, and it can scare a lot of people.
Sure can. Yeah, it can, because CMHC has such a big brand name, and they're associated with the Canadian government. So when people hear that those changes are being made, for a few days there, people thought that they weren't going to be able to buy their house, a property that they've already been approved, they've already bought. Imagine you were in pre-construction and your house is closing next year. You were just going to slide by with the requirements, and now you've got to come up with more money or make more money. It scared a lot of people. But there are enough other insurers that we wouldn't have to worry about that being an issue.
Okay, well, that's really good to know. I'm really glad to hear that, and I'm sure a lot of the people that are going to be watching this video will be really glad to hear that as well. That there's not going to be much of a change in terms of how mortgage brokers actually process the paperwork and everything like that.
Yeah.
Aside from that, I mean, I know that things have been pretty busy on your end. So that means that people must still be buying properties and getting mortgages, right?
Yeah, well, there are a lot of pre-approvals. So a lot of people are looking into, how do I qualify? How do I get out? How do I get, ready to buy something? How do I get, people are looking into pre-approvals on cottages. They're looking at, how do you spend all this travel money that they would have otherwise spent? How do they get, people are like, well, all of a sudden I've got money for a down payment. And so, in the last couple of months, it's a lot of pre-approvals. And now with the supply starting to come back, we're seeing that people are now making offers. They're being accepted. There's a little bit more supply available. And then now I'm just not working for free doing pre-approvals, but people are actually buying homes.
Yeah, that's always fun to work for free and just do pre-approvals all day long, I bet.
Yeah.
Well, I mean, I guess it's always a good thing because you treat them good and you get the future business, right?
For sure. No, it's about helping people, helping them get set up and answering their questions and honestly, it's a lot of fun to talk to all these people.
Oh, for sure. For sure. That's the beauty of both of our jobs. We get to talk to a lot of new people. It's not the same people all the time, which is really nice. It's always great to hear different stories and situations.
Definitely. What are you seeing in your world? Is a lot of people interested in buying?
Well, I mean, I've definitely seen quite a few people that are interested in buying, but the majority of them are kind of on the fence. They're waiting to see, just like I'm sure a lot of people that you're seeing, they're waiting to see what's going to happen. They have that little bit of uncertainty in the market, just like a lot of other people do. But I mean, from a numbers perspective, we are seeing definitely prices going up. Obviously, prices are going up because both purchases and listings have dropped at the same time. So you're still seeing that same balance there. So I mean, that does still drive prices upwards, but they're not going up nearly as fast as they were at the February and beginning of March before COVID-19 hit. So we did see them rise about 5% in May. And about 3%, 2% in April. And that's over last year. So, I mean, we are still seeing very slight, modest increases in price, but in terms of actual volume, numbers are actually quite down. So the number of listings was down 60% in May over last year, and because those numbers are both very similarly down, we're still seeing the same amount of demand for the supply. So the prices are still going up. Just a little bit of economics there that I did not take in college, but
I did.
you learn. I took a very basic economics class when I took my property assessment and appraisal course at Seneca. Okay. So I mean, it was fun, and I did fairly well in it, but it was literally the most basic of all economics classes.
At the end, I have a degree in economics, and really the only thing I ever talk about from it is supply and demand.
That's all really anybody thinks economics is, Sean. It's just supply and demand.
Basically all that I learned. Yeah. It's all
that and equilibrium. The equilibrium.
Yeah,
that's it.
Sure. Whatever that is.
Yeah, exactly. It's a balancing point there, I think,
Somewhere in the middle. Yeah.
Somewhere in the middle. Now,
right.
I know you don't particularly like talking about rates because obviously for every individual person it is different.
Sure.
But on a whole, where are we seeing rates right now? I know the Bank of Canada has held their rates steady. That announcement came out a couple of days ago. What are you seeing right now with the rates?
Yeah, and we're seeing that interest rates have been falling pretty consistently. Right, the knee-jerk reaction right away with COVID was rates went down and then they started to creep back up. And now we're seeing rates have steadily come down to basically whatever product you're getting is likely to be the lowest mortgage rate you've ever gotten if you're refinancing. And as well, it is some of the lowest rates in Canadian history. So,
Wow.
we're seeing kind of 2.5% and down actually.
So what you're saying is I refinanced 6 months early.
You should absolutely be considering doing that, George. I don't know if you're joking or not, but for anybody that is in that situation, it is worth it to pay a slight penalty to lock in for 5 years at some of the lowest rates that you can. Whether you're out a year or 2 years, looking at what that penalty might be and doing that calculation. Okay, I'm going to lower my payments that I'm making every month. I'm going to maybe get a bit of a hit up front, but then we're expecting interest rates will go back up. It's only a matter of time.
They're going to have to, but I mean, obviously they are waiting for the economy to start healing a little bit before they start pushing rates up. Because it's my understanding as a real estate professional that real estate is one of the things that drive the economy forward.
Absolutely.
So I mean, in order for rates to go back up, the real estate market is going to have to start moving forward. We're going to have to start getting some jobs back. Real estate is going to have to start moving forward. And then at that point in time, we will probably see the Bank of Canada increase their rates 0.25%, 0.5% at a time, I imagine.
So I want to just make sure that you understand the difference between the two. So the Bank of Canada will adjust their policy rate up or down. Right now, it is down to 0.5%. But the banks then take that overnight lending rate, their policy rate, and that's what they base their posted or their prime rate at, which is 2.45%. So it is possible that rate will stay the same for a year, maybe 2 years. But outside of that is the fixed interest rates that are based more on what the bond yields and like a fixed payment bond is paying in the marketplace. And so that is not connected to the Bank of Canada's rate in any way. So it can move in tandem, but it is a disconnect there. So as we are paying off those some of the debt that the government has taken on, those yields will start to go down, and the interest rate will start to go up. So those fixed mortgage rates will start to go up before you hear the news of the Bank of Canada making any sort of adjustment in their rate. So it's like a year and a half ago, we were at 3.79 for a mortgage, and it was kind of the most competitive thing going at that time.
Right.
That's, in my opinion, 2 years out from now, that's around where the rate is going to be. So when I say like you can get for 5 years, 2.5%, or you can get in 2 years from now, you might be looking at 3.5% or 4. And that's money out of your pocket.
Absolutely.
If you can take advantage of a lower interest rate now, lock in for as long as you can.
Yeah, then definitely you should. And I mean, when I said I locked in 6 months early, I renewed in October.
Okay.
So, about 8 months ago. And I renewed for another 5-year term. So, I mean, I got a good rate at the time, a really good rate.
For sure.
But I mean, as of right now, it could definitely be a little bit lower. But I mean,
stop looking.
I'm still really happy with the rate that we have. So, I mean, when I first got my mortgage, I used DLC, and they were super helpful. The person that I use doesn't work with DLC anymore. So, I mean, if I did have to renegotiate or anything like that, I would definitely be calling you, Sean.
Oh, I appreciate that, George.
100% with all the videos we do,
That's funny.
So I was watching one of your other videos with another realtor from Remax, and you guys were talking about your bike rides, and you mentioned that Anya's bike got stolen.
Yeah. This is the second year in a row that her bike has got stolen.
2 years in a row? No way.
And it's also the second year in a row that my mom has lent her a bike as well.
So it was actually your mother's bike that got stolen, or was it Anya's?
Well, Anya was currently riding it, but technically it was my mother's bike.
I see.
Yeah.
So I mean, I haven't actually ridden a bike in several years since I was a kid, a teenager, before I got my car.
Yeah.
When I got my driver's license, I literally forgot I had a bike ever.
Yeah, exactly.
I jumped on my brother-in-law's bike last weekend.
Yeah.
We went up to the cottage just to visit them, keeping our distance, of course, but
Yeah.
it was nice just to see them.
I think I find bike rides are a nice way to you do something together and keep your distance. Like
Yeah,
you're kind of keeping away from each other to begin with. Nobody wants to run into each other.
that's exactly right. I don't want to rub my tires, flip, and get road rash from riding a bike.
You didn't
Definitely
try to buzz his tire, like right up behind him and buzz him?
Yeah, definitely. I definitely don't want to do that. Last thing I want, show up for a client meeting with scars all over my face and hands. Hey, how you doing? But it was he has an amazing bike, and honestly, it felt like I was riding nothing, like easiest paddling. And I would never pay that much for a bicycle in my life, but
but you can see why people do, though. Like you can see,
absolutely.
I have a cheap bike and it hurts to ride it, but you can see
that's how you get those quads going, Sean. The quads and the glutes. That's how you get those going. You get the hard working bike.
Exactly.
This one here is a cruising bike. I'm like, I didn't feel anything. We did a 4K ride quickly, and I was like, I feel nothing. Like,
oh, that's amazing.
Yeah, it was really fun, actually.
So you're back in the saddle. I'm gonna start bike riding now.
Yeah, no, not with the bike that I have.
No.
No, definitely not. It's literally the bike that I had when I was 14 years old.
That's the same bike I have right
now.
Yeah,
I don't know if I'm going to be having too many fun times on that bike.
Right.
If I did, I would have to literally take the whole thing apart, lube everything up, look at it, and make sure that it's all in good working condition. Which obviously I would advise if you were using anything that's been sitting for a little while.
Yeah.
But a bicycle, especially, because you're going to take that on the road too. And
yeah, you want to make sure it's in top working condition.
Absolutely. I definitely do. So, I mean, I was thinking about it, and I'm not sure how much work it would be, but it's definitely worth looking into. I had a good time riding the bike the other day, so I might be doing that. And with the little guy around, we're going to need to start riding bikes with him as he gets a little older and starts riding the bike.
Absolutely. Yeah, I find with my kids, we get out and riding bikes. When all four of us have bikes to ride, we get out and do it.
Yeah, I saw the Instagram videos and pictures of you guys down at the down by the lake, and where were you guys? Down by
Lakeshore
in Leslieville area.
Yeah, Ashbridges Bay. We were rollerblading at that time, I think.
Last
time. Yeah, it was a lot of fun. I only had to carry one child for half the distance. So
well, that's okay. Half the distance is not bad,
You really get a good workout carrying an extra 50
Too bad
pounds.
They don't have those baby backpacks, the ones that you put the babies in for older kids.
That's true. Yeah.
Yeah. Just strap them in, start carrying them on your back. I mean, I probably carried books in high school heavier than your kids are right now. Like,
probably. You think back on this type of stuff we were lugging around.
For sure. And the terrible backpacks that we had, it was nothing like the kids have today, where they're full lumbar support and make sure that the weight is balanced on your shoulders and you have the extra strap around your waist. And
yeah,
we didn't have anything like that.
No,
it was a canvas backpack that you literally stuffed as much as you could in there.
Yeah, put it on one shoulder, right?
That's right, one shoulder. Yeah,
one strap in it.
Yep, one strap in. Everybody's walking like this.
That's what's keeping chiropractors in business to this day.
Absolutely. Chiropractors, haven't been to visit one in a little while, but I used to love going to chiropractor.
Yeah, me too. I had to for the backpack.
Sorry, I missed that. You just cut out there for a second.
Yeah, I said you had to for the backpack, right?
Oh, absolutely. And that's when it was while I was in high school. That's when I was going to the chiropractor.
Yeah.
Is there any other information that anybody would need to know right now, Sean?
No, I think let's catch up again in a couple weeks.
That sounds really good to me. I'm looking forward to it. Hopefully, we might be able to do it in person. I know that they're going to be reevaluating the GTA's numbers on Monday. I know everything else outside of the Golden Horseshoe went to stage 2 today. So I know that my brother-in-law and sister-in-law might be going out for dinner on the patio up in Aurelia this weekend,
Oh,
because
wow.
they're able to do that, because they're out of stage 1, they're in stage 2, and I know my sister-in-law is going to be looking for a manicure, for sure. I might even drive up there to try and get a haircut. I'm starting to get into the long hair don't care category. Like,
Yeah, for sure. Like the coming out the back of the hat, you know?
oh, it's definitely coming out the back of the hat. I don't even wear a hat, and I know that. But Sean,
Yeah.
thank you
I'm
again
going for
so
like
much.
the Kelly Gruber now.
The Kelly Gruber. We're done with the Yami Yager and the Ziggy Palfies, eh?
Yeah. Kelly Gruber now.
Kelly Gruber. So you just got to get that little nick on your chin for sliding into third base. That's
the one.
That was the
Got my Halloween outfit already.
There you, there you go. There you go. I'm actually going to grow it to try and get into the man bun, and I'll carry a Starbucks cup and one of those frothers. Be a barista for Halloween.
Awesome.
green apron, and that's it. Good to go.
Nice.
Everybody knows what I am: green apron and a man bun. I'm a barista. But
right,
yeah,
pal.
thank you so much, Sean. You take care. Have a good one, and we'll definitely catch up. Oh, you have a webinar coming up on Wednesday, first-time homebuyers.
That's right. Yeah, first-time homebuyers on Wednesday, 7 o'clock. If you know anybody that wants to come and join, share all sorts of details about what it takes to buy a home, including some different rules of thumb, some different ideas on how you can do it pretty easily.
Yeah, absolutely. And I mean, I've been putting it out there. The last couple ones that you were putting out, I mentioned to a few people, and they definitely seemed interested. It's just sometimes people just can't find the time, and I don't understand it in this time where you can't find the time, or nobody's doing anything.
Everybody's busy in their own minds.
If you are interested in learning about how you can become a first-time home buyer and the easiest route possible, Sean's webinar is the best bet. You get in there, get information, ask as many questions as you need. He'll answer them, even the dumb ones. Don't worry about it. There is no dumb question when you're talking about real estate and mortgages. Everybody has asked the questions that you're thinking about. So don't worry, ask away. And Sean will answer them to the best of his abilities. I get a lot of these questions, and what I tell people usually is, listen, I can give you the most information that I possibly can, but I'm not a mortgage broker. Best person to speak with is somebody that deals with mortgages all the time, and then I refer them to Sean. And Sean has spoken to several people that have called him from after speaking with me, and he's given them the best advice that he possibly can. So Sean, that's this Wednesday coming up at 7 o'clock.
Absolutely.
Perfect. All right, so you heard it. If you are interested, just give me a shout. I can give you the link, or you can follow Sean on his Instagram directly. And that's where's your Instagram, Sean?
It's
Sean H. Mortgages.
Sean H. Mortgages.
Sean H. Mortgages. Absolutely.
That's right.
All right, Sean. Thank you so much again. You take care, and you have a great one. And we will touch base in a couple of weeks, see what's going on then.
All right, buddy. Talk to you soon.
For sure. Have a great one.
You too.
Bye-bye.